Good morning, or good afternoon, depending on where you are watching from. Right here in the UK is about 11:54 a.m. I believe you guys are 1 hour ahead of us in Nigeria. Okay. How has the week been for everyone? Uh, it has been quite an interesting week for me as well, and for some of us who sent out or shared their trade positions with me during the week. I hope every other person in the group had a good one. I decided to make this as a video recording as against Zoom call, so that those who do not have opportunity or have time to join Zoom call can just download this video in the group and watch at their own time. Okay. So what I'm going to be doing this morning is to review the trade ideas we had the previous week. That was last 2 weeks, I believe, going into last week. Okay. So on the 6th of January should be on a Tuesday, right? I sent out this trade idea that I was looking to sell the euro against the New Zealand. Okay. Basically, the reason being that the institutions are heavily bearish on this pair. Okay. When I mean they're heavily bearish on this pair, they are very bearish on the euro and very bullish on the New Zealand. Okay. Like I did mention in the Zoom call we had explaining the strength meter, this is not your usual strength meter. Okay, this is based on institutional positionings. All right. So I sent out this idea that I was going to look to sell the euro against the NZD. Okay. And I think I sent the chart, yes, of how this was going to look like. All right. So, bear me 1 second. Sure. All right, thanks for that. So, I was looking for this is at the daily time frame. Okay, so I was looking for a pullback of some form of pullback into this zone, right? This level is an IPDA price level. I was looking for some pullback into the zone, or preferably into this daily fair value gap. Wherever you take your trade from, you should still be fine. Okay, I was looking for a pullback in this zone, a stop loss above this high, and then the target was this liquidity, IPDA liquidity level here. All right. Now, let's go to the charts and look at what happened on that week. I believe, let me take this off. Yes, so this was that price level where I was looking for some pullback into this level, right? So if I bring that up, you could see clearly that was that price level. So let me just copy these charts to our screen so you can see what I mean. So this was it. Okay. Right. So if you have a look, this level was this one. Okay, so I was looking for that pullback into this zone before the actual sell-off, right? Which indeed happened, interestingly, right? If you have a look, you could see that price retraced to this IPDA level, and then we're seeing some form of pullback down to that price level where I am expecting price to get to this one. Okay, This is not the best of the pullback you can have, but sometimes when the institutions wants to give you opportunity to enter, right, you could see this kind of jagged move, or how do you call it? So long as this is not breaking the high here, because you could as well put your stop loss here, right? Something like this. And mind you, these are swing trade ideas, okay? So if you are a day trader, what you should be looking for is a confirmation on this smaller time frame before you could take your trade entries, okay? But if as a swing trader, if you have your entry here and your stop loss here and the target down to this place, right, you're basically looking at let me have a look. So risk this should be 1:6 or more. It should be 1:6 or 1:5. 1:5, I believe, and target to this level. If you're trading on the with a prop firm, you can literally just pass your accounts with ease, okay? With ease. So for me, I still have the bearish idea on the Euro NZD, okay? However, I didn't take this trade on my personal account. I took the Euro USD sales instead, okay? And I'm still looking to have a trade into on this one as well. So if you want to take this one, you can. And if you still want to take the Euro USD sell, the choice is yours, okay? So if you're looking at selling the Euro NZD into next week, what I should be looking for is a pullback into this fair value gap here, and then continue to that price target that we had, this one, okay? So if you're looking to sell here, remember your stop loss should be on the swing high here, which is the swing high here, all right? So for sake of clarity, something like this, okay? This is for swing trade ideas, all right? And then you can choose to hold your trade down this way, okay? So this is for Euro NZD continuation sell. Let's go back to the charts. Let's see. Yeah, so you can see I sold the Euro USD on that week. Yeah. So the next trade idea that we had was the crude oil buy. Okay. For the sake of clarity, I might just have to review or explain why we came about this crude oil buy idea. Okay, but before I go into that, I did post on the group that I am looking to buy the crude oil, reason being that the institutions are heavily bullish on this pair. Okay, and there were other factors that we outlined on that day or pointed out that was going to fuel this idea. Okay, we looked at the fundamental idea, okay, which was the fact that the US government invaded the Venezuelan government, okay, and Venezuela has a major role in oil production in the world, okay, and Trump at some point tweeted they were going to be taking over the oil distribution in the country. And again, there were threats that the US government was going to attack Iran, and Iran is another big oil producing country as well. Okay, these are all factors that are aiding our idea. Okay, they don't determine the direction, they only aid the reason why the big boys are bullish on this pair. Okay, so how it works is we need to see the big boys and the COT reports being bullish on this pair. I will show you guys again very soon, and then we need to go into the chart to see if there's some form of sweep of liquidity, break of structure, confirming the trade idea, and then we can now look at the fundamentals like geopolitical tensions I just mentioned, seasonal tendencies, if they will all align, you have a good trade. Okay, so let me see if I had pushed a trade idea. Let me see if I had the charts. Okay, I didn't send out a chart on what I was looking for, but however, I took that trade, and you can see where I entered on this trade on that day. So this was on the 8th of January. I took this trade. Okay, and I took this on my futures account as well, and this was on my smaller accounts. Okay, yeah, I think this was a trade idea. Okay, so but I entered before this break, right? And I did post that I want to see the price get to this level. Okay, I think some other guys too, like Special, took this trade as well, and then they made money. Okay, so if we go back to this chart, this was the crude oil on the daily time frame where I took that chart from. So this was crude oil on the daily time frame. Okay, price, where is it? Price eventually broke this zone and broke out. Now they have broken structure on the daily time frame. This is good. Okay, you see this action here? This is a perfect break of market structure. Now when they did this, I asked everyone that was on the trade to get out of the trade, because we should see some form of pullback before continuation to this zone. Okay, good. So you can see that the crude oil rated liquidity here, right, created an inversion fair value gap here, indicating that there was a smart money positioning in here in line with our COT reports. Okay, price pulled off, broke this structure, and then we're looking for pullback. Now I'm going to make something clear. As an ICT trader, okay, if you were an ICT, or you are an ICT trader, or smart money, or SMC, whatever you call yourself, or whatever kind of trades that you take, this is what you would have been looking for before entering the trade. Now the difference between what we do is we are in the trade before this happens. If you have a look, where's that chart in the group? I sent something. So see, we're already in the trade before that move happened. Why? Because we know that the institutions are behind it. It's going to move. Okay, like I did say, or I did mention, I used to tell people, sorry, if you know why the trade would move, you know when the trade would move, you already have an edge. Okay, 90% of your job is done. The remaining 10% is where you can even enter anywhere. Okay, you can enter anywhere if you know why this market would move, when it will move. Okay, where it will move from. These three things, you already killing this market. Okay, so the why was what we explained using the COT report positioning and Zoom call that we had. When the timing, you could use some free tools like the seasonal tendencies to time this one to know when it will move. And then where you can use anything. Okay, this is for support and resistance, guys. You can use this place as a support to enter, but me, I can't enter here. Okay, I need to see some form of reaction before I could enter, which I did. ICT trader, you could see an inversion fair value gap here already, so that was why I entered here. Okay, smart money concept, guys, break of market structure. It is this week that you should be looking to enter. You will be entering this trade idea late, but however, you're still gonna make money so long as you know why the market is going to move, when it's going to move, and where it's going to move from. 90% of your job is done as a trader. Okay, so I'm still bullish on the crude oil, but I need to see some form of reaction off this zone probably into this inversion fair value gap here, and then a bullish close. Once I see a bullish close from the discount of this leg, right, I should see price get to this place. Okay, very good. Just for sake of clarity, I'm going to share the reason why we were bearish or bullish, on the crude oil. All right. So like the last time that we discussed, okay, the smart money are heavily bullish on crude oil hedge wise. So if you look at the last 3 months activity, 6 months activity, 12 months, 2 years and 4 years, they have been buying the crude oil at a very low price. Okay. Now what we need to do is we need to go to our commercial COT index to see if they are above the 80% price level. Okay. If you're new and you're seeing this video for the first time, there's a beginner. You might just need to flow with us because I have to. There is a beginner of, how do I put it now? So there's a fundamental training on how to use this tool and what all these things represent. Okay, so just know that when this positioning are above the 80 level, using this tool, we are looking to buy that pair, and whenever they are below this 20 level, we are looking to sell that pair. Okay, so what next do we do? Right, we look at the smart money positioning as well. Okay, this thing is not RSI or support and resistance, so you can see that they are deep in the buy zone. They've just left the buy zone and they're moving towards the sell zone now, so this is a good buy confirmation. And then we'll look at our commercial hedging tool as well. It's above the 50% of this range. Okay, many of you in the group, you already know what this tool stands for and how we use it. Okay, one other thing I'm going to introduce in this video is the seasonal. I know you guys have not heard about this one, but just going to show you guys. So there's what we call the seasonal deviation signal. Okay, what it does is there is a seasonal band range that I look out for, okay, for a certain period of time. Specifically, I use the 5-year range to look at these bands. Okay, and then if price is outside that band based on their seasonal deviation, I should see either a buy or sell signal. Okay, so for crude oil, price is now way outside the seasonal deviation for the 5-year term, and it's also confirming our buy setup on the crude oil. Okay, so this is in addition to what we are doing with the commercial positioning. All right, another thing I need to see is what the institutions are doing week on week. Okay, when I mean the institutions now, I mean the speculators now. Okay, the non-commercials. All right, if you have a look week on week, they have been reducing their shorts kind of. I think they were dropping their shorts. Let me have a look. Sorry. Speculators. Okay. This is not the cleanest I could see, but let me just see if I could get another. Okay, so let's use this one then. So if you have a look, right, the commercials have been really reducing their bearishness and they've been bullish. So if I check in the last, you could see, wait a second. Sorry, you can always rewind this video and watch. So I want to see from previous weeks. Just 1 second. So this was far back as September 30th. Okay. You can see how negative they were, the commercials in their net positioning, right? You can see 121, 102, 114, 118, 13. Till now, so let me change this to the present week, you can see that they were not as bearish anymore as they were previous months. They are now bullish, and the non-commercials as well are now very, very bullish. Now, what are the retail guys doing? The small traders. They were very bullish before, very still bullish, but if you have a look on what they're doing, they're not consistent. So they're trying to reduce their bullish positions now, going into bearish positions now. Okay, I'll not be surprised if by next week this thing turns to red. That is what we want to see. We want to see them going towards the wrong side, okay, being bearish, and then crude oil should rally. Okay, another thing that we looked at again as well to support our ideas, apart from the fundamentals that I mentioned, which was the US government invading the Venezuelan government and trying to bomb Iran, we also looked at the seasonal tendency for crude oil. Okay, so this is crude oil. I use this website for my seasonal tendencies, alright? I use the free version. I don't need any other. That's why I didn't pay for this other plan. I don't need those ones. What I need to do is the free versions. Okay. So what you're seeing is seasonal tendency. When I mean seasonal tendency, what has price done in the last probably 5 years or 6 years or 10 years? But in this case, what this platform, what their tool has done is to match the year that is correlating positively to the current year. Okay, so if you have a look, the red means the current year. So this is us now, currently, what price is doing now. Pre-election year means any year after the election, the US election. So the US election was last year, so this year should be after. Okay, and then 2005 price action also matches this trend direction. Okay, now what this thing is telling me is from now onwards onto at least the 4th of March, I should see price rally in crude oil. Okay, this is crude oil. Okay, so this is another confirmation in support of what we are looking for in the crude oil analysis. Okay, so going into next week, I'm still bullish on crude oil, but I need to see some form of let me use these charts. Okay, I need to see some form of reaction from this zone and the bullish close, and then we should see crude oil rally up until, is that 66, 65, 66 per barrel. Okay, make money. Perfect. So that is that for the review of our trade ideas that we had last week. So this week, my trade idea is the Euro USD. Okay, why the Euro USD? I have been bearish on the Euro USD, simply being that the institutions are still selling this thing, and then they are bullish on the USD. Okay, if we go back to our edge system and look at what they are doing on the euro, hedge wise, the institutions are very bearish on the euro. Okay, so let's look at the COT index. You can see that they have started distributing now. So this is bearish move, so they've started hedging now towards the buy side, so we should be looking for sells. Okay, our 6 months hedging trend program, right, shows that price is below the 50% of this range, meaning we are very bearish. Okay, also there's something that I like to look at, which is the net Should I bring this now? Okay, so let me just bring this now for you guys. Okay, there's a lot to learn on these tools, so you don't confuse yourself. Okay, just take the basics and run with it. These are the additional confirmation filters. Okay, are tools that aid my idea. Okay, what I do is I look at the speculators fund, right, as a threshold, right, in a range format. Anytime they are above this green line, which is my 15% threshold in respect to this range, I should see some form of reaction, meaning that they are very bullish now. Price should see a reversal. Okay, because if everyone is buying, what happens to the price? No one is selling. It should drop. Okay, so these are the extremes that I look at as well. Okay, using the net speculators fund trend. Okay, if you want to see what has happened in the past, let's say for example here, you can see where they were above this level. See how price dropped, and when they were near or close to this level, see how price rallied. Okay, just see. Okay, see also here. Okay, price dropped. Also, seasonal deviation signal tool is not left out as well. If you have a look, it's telling us we have a sell setup in the euro. Okay, that is why I am looking to sell the euro against the dollar. The dollar has been bullish, right, from the last analysis that we made. Okay, let me have a look. So if you come here, I think we checked it on this day. Sorry, let me use this day. Commercial COT index. So this is the dollar. Okay, you can see that they have been bullish. They've generally started accumulating bearish moves, so we shouldn't be concerned about that. We need to see the bullish move play out nicely before the bearish move starts. Okay, so trade idea for me going into this week is Euro USD sell. Euro USD sell, and then crude oil buy, okay, and Euro and ZD sell. Okay, you can see sell the pound, because whatever the euro does, the pound does. But for me, I like to play in the pairs that the institutions are interested in. Okay, how do I know? I have this tool where I look at what these institutions are doing week on week. You can see that the euro has been very bearish. Okay, in fact, the JPY was the most bearish last week, but the pound has some form of bullish strength in it. So I'll just kind of like stay away. Not like it wouldn't sell, it would, but it's gonna run stops. Okay, like last week, or was it last 2 weeks, I had the trade idea to sell the pound. It later dropped, but what happened was they went further up to run stops before selling off, unlike the euro that just sold off. You can see how bearish the euro is. Okay, so I would prefer to trade the one that the institutions are interested in. I'm looking at this place as my targets, okay, for the euro as against the pound. All right, let's look at another trade confirmation idea for the euro, seasonal tendency. Euro USD. Seasonality. Good. This is a clear bearish move into March on the Euro USD. Okay. It's telling me that it has a 94.8 correlation to the post-election year. Okay. And if you look at what price, let me remove the 2005. If you look at what price is doing, it has been following this seasonal tendency like magic. You get. And now what is happening? It's following. In fact, if you had followed this thing without even my COT analysis, but it's good to have the institutions behind your move. You would have just been making money. See as the price has been following this, like a leading. It's a leading indicator, anyways. You understand? So you just have an added advantage of what you're doing. So if you look at the post-election year that this price is following, that's the Euro USD, you can see that price will sell deep into March. In fact, we should see some form of range before the move will start in July. You already know from this thing what is going to happen. You get. So this is another advantage that you have at your arsenal, and use it in line. Pass your accounts, pass your trading, your preference, make money, withdraw, ignore the noise. You understand? And just let me feel there. So for me, these are the pairs I'm looking for going into next week. I would still send out the breakdown in the group. If you have any questions about this video that we've just done, or whatever part of the video you don't understand, I don't intend to make this too long. Feel free to reach out to me. I'll be more than happy to explain or answer your questions. All right. Good luck and good trading.